The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be on Monday, Wednesday, Friday, 11 o'clock until noon. I'm your host. And the number to call in is 877-927-6648. And of course, I follow, well, in this case, it was 2 hours, outstanding hours of Steve Rhodes. Now, Steve is giving, I believe it is coming up in the Boston area a week from tomorrow. Am I correct? Did the Orlando one? Yeah, a week from tomorrow, Boston area will be his Master Trader Series, Friday and Saturday. And you've heard him. You know how he teaches the A to B, then the B to C, and the C to D. So it's A to B, C to D. That's his technique, as one of the many, many techniques. But it's something he specializes in, just as Tom does. And in fact, what Steve adds is a number of components that he's put together himself. So just it really, we're about education here at TFNN, and I would very much like to think that every one of us, when we come on, our prime objective is to have an educated public, to be educated ourselves. I learn all the time. I learn from whom I'm listening to. There's just so much information. Kate, I believe Kate will be doing Larry's show today, coming on at straight after me at noon Eastern Time. And she comes in with a completely different perspective. Even though she comes from the IBD school, even a different perspective to Ken Shreve. And Ken has, tremendous techniques. And now fortunately, we've got Kate here, the small cap roundup, doing exactly the same thing. So we're about education. It is really important in the universe, in the spectrum of techniques that you develop, to be able to take a little bit of this and a little bit of that, to add it to your technique. It must. Whenever I finish my Master Traders course, I look at the faces of my attendees, and I say to myself, have I given enough information for these people to add it to their own techniques? I don't want them to turn around and try to be a clone of me, because they can't. It's impossible to be a clone of me, as it's impossible for me to be a clone of them. But when you take information that turns out to be relevant and you add it to your technique, not only do you have something very special for yourself, but you have something very special in the way that it imbues all your trades. It even starts to imbue your thinking. For instance, why would you, if you haven't yet got the skills, why would you be wanting to short either the very best stock in the entire market on a fundamental and technical basis? Just as why would you want to be buying the UNGs, the very worst index or indicator or ETF or ETN, until you get substantial information, until you get until you can build the kind of technique that says, I am capable of pinpointing, if not this time, it's within 1 or 2 times, but the third time definitely, the exact turnaround of this particular stock or index or whatever it is. Other than that, you've got to be very careful at instances like that. Well, it turns out in the ChapmanWave technique, we were following for subscribers last week the action of Apple. And Apple right now is trading at 612 as if nothing had happened. Blah, 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 blah. Well, it hit a high, a round number high. Actually, TradeStation changed at 644.05 to 644.00. So not only did it make a round number high, and I use round numbers in a very specific way. I don't like just to arbitrarily say round numbers. I've been using this technique from way before 1987 crash. When the crash of October the 19th occurred, I watched. Absolutely. I had on my computer the trades that were going by of Eastman Kodak, General Motors, Merck, General Electric, DuPont, UTX, and they were hitting round numbers, and then they made round number lows. And in fact, some of those round number lows weren't ever touched again for years. So I use them in a very specific way. I love when I'm getting a leg E or a leg F in a major move to the upside, which coincides with the potential, I only say potential, for a weekly to start turning down. That says to me, I must look for round numbers, either at the opening, the close, intraday high, intraday low, right around the area that I'm anticipating. I look for it in the 120-minute chart, I look 10-minute chart, daily chart. Well, Apple made a leg E and then a peak E at 644 on the 10th of April. Pullback within 2 days. It closed just on the 9-period exponential moving average. My reasoning was if it closed under 619 to 616, it would go down sharply, and then there was a chance that very soon it would test the breakout, the gap breakout of 575.40, and test that. And what did it do yesterday? Went to 571.91. Didn't fill the gap because the high is 568.18, and had an enormous spike right to where the 9-period exponential moving average that was the support before, and bounced higher today. Went above the two, and it went into the candle, but not above the candle of the 13th. 624.70 is the high. And I said to subscribers today that the 614, did I say? 614? 614 or 19 to the 624 area is going to be strong resistance for Apple. And I suspect that if it starts to fail in this move and goes back into the candle, goes probably back into the 590s, it will go down and start to test the gap. But if it holds really well, that 9-period exponential moving average in the weekly chart, which it touched and bounced off yesterday, that 578.32 level is going to be critical over the coming week or so. So we're going to be watching this really closely. Now let's go back to the market. The Dow is, so let me just finish that thought. So when you're using particular techniques, that's when you're able to possibly pinpoint a top, whether it's a major top or not. Time will tell you. It doesn't say immediately that that's the way it's going to be. Most importantly, it gives you the technique to say, if I'm wrong, I know exactly where my stop would be under any circumstance, and that would be at 644.01. It depends, of course, where one went short, but in this particular case, you break above that 644 level, and you've got something else going on. Now let's go back to the market. The Dow is down 61 at 13,054. Now let me just do this. The Dow has made a fabulous move from the low of 12,710 on the 10th of April. Isn't that interesting? That was the high. Wasn't that the high I was talking about for Apple? Anyway, so what happened was it hit that level, did not break under 12,700, and ran up fantastically in one leg, pulls back. Leg B starts above 12,987. Yesterday we started leg B. Today we're going to possibly make peak B. But I call this, let me just change the color, I call this gray A and gray B. What does that mean? I tried to show that the colors give very clear indications. You can just glance at a ChapmanWave notational chart, and what you will see is within a split second, you'll see that on the way down, I use lowercase letters, and on the way up, in the buy mode, I use capital or uppercase letters. And those uppercase letters can go to A, B, C, or D. Now, I spent some time discussing with one of our callers, Ilka from Boston, about, time flies, maybe it's 3 weeks ago, 3 weeks ago, that there was a particular technique that I call the ChapmanWave. It is not just an instant restart, but it has a characteristic that I call a ChapmanWave flat base restart. Now, I don't want to make this very complicated, but what I will say is that flat base restart in the daily chart that I send to subscribers every single day started at 12,743 back on the 10th of February. And even though, and this was the whole segment that I spent on it, even though we went nominally 9 points below it on the 6th of March at 12,734, the entire characteristic had an peak A, peak B, peak C, which would go to a D and then a possible E, and then it would pull back. It would pull back where? To the starting point or below, and then it would bounce right back into the arch. Boom! It goes down to 12,710 from the high of 13,297, 2nd of April, and then plummets down to that 600-point level at 12,710, and now it's rallied all the way back to 13,131. That's more than a 50% upside retracement, and to me, that is a good sign. Now, let's go back to what I'm looking at here in the very small time frames. No, I need to finish the numbers. The S&P is down 5 at 1384. Now, isn't that interesting? Today, the S&P is stronger than the Dow. Why? Because the Dow's got IBM in it, and IBM's down. So the comp index is down 14 at 3,028. Gold is down 7 at 1644. Silver's down 19 cents at 3147. High-grade copper is down again at 362.270. I have to take that into consideration and say that even if there's a rally here, and even if we make new highs, it's so selective, this move, that you've got to be stock selective, because the weight of evidence says that we are in a rotational correction, and that certain stocks will be doing well, and other stocks will just start to decline, and some that have been absolute favorites are going to start a very sharp pullback in this particular phase. So we'll go on. I think I need to go to the high-grade copper. High-grade copper, HGM, trading now at 3.64. Wait a minute, 3.64. That says 3.62. Let me just update this. Is that right? Am I looking at the same contract? HGK. Oh, HGK. All right. I've got HGM. If it's HGK, fine. HGK. Yeah, it's the same chart pattern. I'm going to go back to my M because I've got that all notated. And the June contract says that it needs to climb and start making 3.7, which is the 9-period above the 9-period moving exponential moving average. It needs to make that once again. A support level rather than what it's been, a resistance. That monthly chart has broken the gap, broken under the 200-period moving average, but it's the weekly chart, and I have to wait until Friday at 4 o'clock to really decipher it. So far, it's not great action. So before we go to the first break, let's see, we've got crude oil down 120 at 102.99, and bonds are up a half a point at 141.24. Basil Chapman, 877-927-6648. Love to take your calls. And we'll look at the euro as well. And we'll look at the dollar. We'll look at all these things. I'll be back straight after these messages.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume and the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, everyone. We're back. Basil Chapman, and I had a question to follow up on the indexes that I'm talking about. I had a question about the TWM, which is the ProShares Ultra Short Russell 2000. I'm going to do, if you don't mind, the IWM, since that's the root. We need to go to the root rather than the ETF, 200% short. So if you're looking at the IWM, the weekly chart made a peak E and has pulled back quite sharply from that peak E. In fact, I'm probably going to change that plus sign to a down arrow, but I'm going to wait until Friday afternoon. Now, what's really important about this chart is if you look at the weekly chart, it's trading at 80.12, down 70. This is the iShares Russell 2000 Index, the IWM, and it's at 80.13, so down 69 cents. It's made a pattern that says this is a very heavy. Rick in British Columbia would look at this and say, doesn't that look like a head and shoulders pattern? Well, this is a very heavy, it's more an arch formation, 3 arches. Wow. Anybody remember 3 domes and a peaked house? What is it called? Something like that. 3 peaked houses and a dome. Well, this is like a very an arch made up of time to the left side from mid-January into a retest in March the 6th. March the 6th starts in a higher bounce that goes to peak ABCD to the 84.66 high, and then starts a left side, right side time price match, which it breaks in a quicker time. It goes to 78.14. But this is the interesting thing. It then rallies, it closes above the rallies into yesterday's high of 80.27 from the 78.14 low. Now, this is important to me. Doesn't start a mini arch failure formation here. Well, we all know if by the end of the day it's able, instead of 80.15, if it's able to get to the 80.40 area, round about the 9-period exponential moving average, that'll be really important, because it'll say, yes, there's a chance that this can move higher in the up channel rather than the lowercase h formation. And if it does that, what will be very important is it needs to break to leg C above 81.55. Okay, now, if you asked me about TWM. If you're in the TWM, then I have to treat it as if you're in the position. What should you do? Well, at this particular point, the IWM is being repelled at the 200-period exponential moving average, which was great support in the 120-minute chart. It's breaking down and it's pulling back. If the IWM breaks underneath 79.51, that'll say there's a real good chance it's not only going to test but break under the low of 130 on the 16th, the low of 79.26. If for some reason later in the I use many techniques when I show my subscribers every single day. I've developed techniques that are totally proprietary. Not that I don't talk about them on air. I teach them my Master Trader series, but they are my particular tools that I've developed. One of them is my ChapmanWave Trin Gauge. It has absolutely nothing to do with Richard Arm's interpretation of his own index, the short-term trading index. I take the information and I've developed my own tool, very simple tool. And it says to me that this particular index has a 90-something% accuracy rate. It's actually really more 95, 96 if I give it just a little bit of leeway. But I'm going to be strict and say it's about 92 to 93% accurate. And what it says is that regardless of how strong the market closes or how strong the opening pre-morning action is, sometime early in the morning there will be negative action, and that negative action should see a pullback, and that pullback is, I used to call it a rug pull, but it could even be just 1 point. But the fact is that it's a surprise. Most people think we would just follow through on the upside. This tells you that if you're interested in buying, you can place buys based on the fact that there should be a pullback that morning. It also says that if you were long and you weren't sure what to do because the market's closing at the highs, you can take profits because you probably have a good chance of getting in the next morning. Or you could even think of shorting at the close, something that's pretty dangerous, but overnight. But you can put in a stop and you could do it that way. Well, my short-term trading index said that we should have a rug pull this morning, or at least a pullback before there's a rally. Well, we had that pullback. We had a pretty good rally. Now it's giving some of it back. This is the key. At this particular point, the IWM is saying, I'm not a very strong index at all. The S&P, and I'll go into some of this in a little bit more detail in the next segment, but the S&P says, I'm holding really well, and the Dow says, hey, I've done great. I am, at this particular moment, one of the stronger indexes. I'll be right back, 877-927-6648.
Hi, folks. Turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more. And that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion. And for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. And these are the best kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk and you get all the benefit. Go to the homepage at tfnn.com and sign up today.
You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices, along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. I had a question, an email question saying, what really is your position right now? I think that's a great question. My position is this, that I'm staying away this is right at the moment, I'm staying away from the indexes. We had trades on the indexes earlier on when we were short the indexes. I am looking stock specific. We have core long positions, which we're still holding. They're held up very well. I'm a little cautious right now. I might have to make some decisions about them over the next day or two, whether just to get out and come back in at lower prices. I just don't know. We also added a position yesterday, 2 days ago, 2 positions on one stock, and that was because of the technique that I use, the falling axis, lower highs and lower lows, making a declining cone formation, breaking out above it. It's been very good. In fact, it's well, I don't even like to talk about it, but it was up over 2% this morning, besides being up very strongly yesterday. So that's the only way I want to go. I'm being very stock specific, and that's the one thing. And the other, and that's very important to me. And the other is that I'm watching to see the way, for instance, the transportation index is held really well. It hasn't made a new recovery high, but it is so close. Its IYT is at 94.65, and the most recent high was in the 96.22 area. If it breaks above that, that's confirming that the Dow has the potential to move towards that 13,300 area, number one. Number two is, when I'm looking at individual stocks, there are some that I am getting very cautious about. For instance, some of the restaurant group I think is getting quite toppy. And I'm looking at a stock like AZO, which has just been outstanding for 3 years, starting to stall and making a high-level rectangle formation. I am quite prepared to, we've already tried a couple of times with both CMG and AZO to short. We've either just got a tiny gain or a tiny loss, but that's not the issue. The issue is that I'm starting to get a feel for them having limited upside. They aren't able to participate very well. I think they're starting to stall out. That means that there's sector rotation going on. It means that some stocks can still do very well, and I include in that some high techs, not all, because you saw what happened to IBM. Although IBM does have a habit of the day after earnings. Gosh, I remember years ago being down at Government Center. I bought puts on calls or puts. I bought calls on IBM thinking that it was going to have a fantastic report, and it did. And there I am at Government Center, and all I had was this little pocket call, this quote something, little pocket thing that I used to always walk around with, Quotron, whatever it was. And I take this out, and here I am. I had some business to attend to at Government Center, and I look, I thought, man, I must be up a fortune. And IBM had dropped 5 points, or maybe even more. That was way back. And I'll never forget, IBM has a way of coming out with earnings, and then there's something that people don't like. And then within a couple of weeks, sometimes even 3 or 4 days, it starts to make new recovery highs. But right now, I'm looking at IBM weekly chart, and this is the thing that concerns me. IBM weekly chart, we've made 210.69 high. MACD's pulling back. Stochastics at 85%, very good. But they both are turned down quite strongly, so that the beta, that spread in the histogram and the spread between the 9-period differential, the yellow line that you can see on Tiger TV, and don't forget these programs are archived on Tiger 11. The difference between the red line, the slow-moving average, and the fast-period moving average differential is actually quite big. And that says there's a chance that IBM could close below the 9-period moving average, which for the first time since it broke out back in January the 20th, week of the 20th. And that would say to me, be careful, because it's starting to stall, and it could have a digestive period for the first time in quite some time. If you look at, say, a Triple M, pull back, and now it's trying to tackle the 9-period moving average after peak E, round number 90. Where's my book? Round number, I didn't put round number Triple M. I've got others. No, I have. Round number, I got the low, but I haven't got the high. Triple M, weekly, I should be daily. Daily, round number, there it is, peak E. A right arm extension, 90 on the 15th of March, 3/15/12, right arm extension. Oh man, I'm just getting all these things down so people can know exactly what I'm talking about with examples. So this is the issue, that it's gotten right back, it's made a sine wave formation, it's getting right back, but the stochastic's only at 42% in the daily, the MACD has not turned up. That says 2 things. One is, if we fail here, failing at a peak B, going to peak B minus is a big negative. It means that the 85.28 level for Triple M, which is at 87.20, will be key. And that's the way I'm looking at many of these stocks. We are kind of cusping. We're on the cusp of either making a buy mode by the end of the day. If the Dow's only down 27 points, S&P's come back to unchanged. That to me will be really good, because if there's a follow-through update for leg C tomorrow, hey, we're going to leg D. if we fail and we close down 120, if we've done what we did last Thursday and Friday, where we have huge up day and then a huge down day, that'll say, and the VIX, the volatility, remember, I've been saying it's not about the dollar for about a year or more. It's about the volatility index. And that darn VIX is at up 65 cents, up 19.11. It's walking the 9-period exponential moving average. That says to me that we've got to be careful. That's why I'm saying stock selective. At some point, we're going to get a definitive break for the Dow. It'll be a break above 13,220, going right to the old high. And on the downside, if it closes underneath 12,870, 12,850 in the next couple of days, it says that 12,700 level is game. So now 877-927-6648. Hey, I've got time here for the calls. Let's go. Now the question, I didn't fully answer that IWM question. The IWM question has the same kind of parameters, but even more clearer, because if the IWM only breaks above the high of yesterday, 81.55, it's at 80.06, going to be tough to do. That would be positive on the shorter term. I still see limited upside for the IWM. And then we could be having a sideways trading range consolidation. We've done that many times before. Or we could be having one of those 15 to 17%ers. What's the difference? The difference is that if the volatility index on the downside, if 79 breaks on the IWM, be careful, because 78.14 is likely to beat, with 77.51 being absolutely critical for the IWM. So I hope that helped you on that question. Now, VIX index. Oh, and I'm also meant to say we are short in my opening call. We've been short almost like a core position of this one particular stock. I'm not going to tell you what it is, other than to say it's one of those stocks that if you buy one, you get three for nothing. The issue here is that has not broken down. It's in this H pattern turning into an M. If it breaks below the left side low bar, it is gone. It is done for at least a little while. If it manages to break over the arch formation, it's going to do very well. Then obviously buying 3 for 1 is worth it. So in the volatility index, the VIX index at 1915, if that volatility index either this week or next week takes out 21.06, if it gets to 21.20, my suspicion is 21.20 is nothing, because it's going to go very quickly to the 23.74 area. That will say market under pressure. Not only will it be under pressure, you will finally see the dollar, which is struggling. I wish I had the time now to get to my chart of the... well, I had this notated. What the heck is going on here? Well, we'll notate it now. The dollar index, the 120-minute chart, had a horrible slide today. And you know, this characteristic for the dollar is just telling you loud and clear that it is struggling, absolutely struggling to break out. It is just, I suspect the government is still putting pressure on the dollar to keep it low. Now look at this. The 200. Look how beautiful these technical indicators are. Look at that 200-period exponential moving average. Look how it's been. Resistance, support, then resistance, then support if you're looking at Tiger TV. And then it breaks out. It looks fantastic. And what does it do today? Blop. It goes right under the 200-period moving average of 79.60, I think it is. And now it's trying to get back above it. It's at 79.58. That monthly chart is still holding quite well above the 9-period exponential moving average. And the weekly chart is still so far holding okay. Now, let's go to another thing. We had a stock today, ISRG. ISRG is Intuitive Surgical. It's up $47 at $592. I want someone to tell me, other than in the year late 1999 and early 2000, when have you ever, in the last 40 years, seen so many stocks in the high triple digits? To me, that is uncanny. And I think one of the reasons is, excuse me, is that the Google and Apple and ISRG, the companies are trying to maintain these stocks as really sacred cows. They want them to look great. They want to be great because you don't have to buy them. You don't have to buy 100. You could buy 5 shares at $5.92. It's the thinking that goes along with it. Let's go to our caller, Mike in New York. Hi, Mike. How are you?
Good. How you doing?
Very well, thank you.
I want to look at FNF, Fidelity National.
Wow, I don't think I've got this. I had once upon a time looked at this only because it said Fidelity. I thought it was connected somehow to Fidelity Investments, but it's not. So this has made an A, B, C. It's in leg D in the monthly chart. It's at $18.70. Really strong weekly chart. And I think that when I look at some of these regional banks, they're holding up extremely well. And my suspicion is, and I could be totally wrong on this, my suspicion is that these banks are going to, in some way, as I said before, selectivity is absolutely important. And these banks are telling me that some of them have gone through all the rigmarole, they've gone through the due diligence, they've gone through everything, and that they're now coming out really strong. UBS, I think, is one of those as well. So Fidelity National Financial at $18.70, down 3 cents. Oh, you're long the stock?
Yes.
Okay. My recommendation...
Yes, I just didn't know the on the monthly, do you get like a double count there?
Yes, I do, but my last count is the one I'm going to go with. There was a very strong leg B and it failed. Then there was another A and it failed. Then there was another A and it failed. Then I'm going to do this so that folks in Tiger TV can see it. This is what's called, it's what I call the single leg A up failure pattern. In this case, it happened to go to B, but it's really the same. The genesis of it is that I noticed that there are certain price movements that go extremely sharply to the upside, but it's really like one big thrust, and then they come down. It makes the Eiffel Tower, or capital A, failure if they break about 60%. They go under 60%, then invariably they're going to go either to or very close to the left side low. In this case, it went up huge from the low of $6.66, 6.66. Remember, 666 was the low of the S&P back in March the 9th. And it went to April high of 2009 to 22.85. And then it pulled back to 11.97. So now what I do is I put a plus sign. And I say, okay, now this is ChapmanWave restart. And it goes quickly to another A, and that fails, but it makes a higher low. That's very positive. Then it makes another A, and that fails, and that's also an inside bar. So what's happened now is, so we go down to 1274, up to 1584 in April of 2010, pull back to 1260 in July of 2010, and that starts the new buy mode. And that buy mode goes peak A. It does fail, but it makes a higher low, so you can use the next one as a low, as another start. So this had four failures. What's really important about the ChapmanWave restart, not the instant restart, but the restart, is that once it sets up a buy signal, I couldn't tell you how many times they go to leg D at least, and this has gone A, B, C, and now it's in leg D. And if it closes April anywhere towards the 19 area, there's just a really good chance it's going to try in the next month or two to get to 20.29, which is the monthly 200-period exponential moving average. Now, because I love to talk about strong stocks, especially in this environment, would you mind holding on so that I can get to a little bit more detail on this?
Yeah, sure. Great.
Thank you. Folks, we've got Mike talking about FNF, Frank, Nancy Frank, Sinatra, and we've got it at 1871, down 2 cents, and I'll be right back with Mike from New York, and I will have finished the notation completely in the daily.
Put the power of the ChapmanWave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's ChapmanWave methodology for several years now. His ChapmanWave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the ChapmanWave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his ChapmanWave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Rand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed, with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, folks. Basil Chapman, and I believe that Kate Stoltz is going to be doing it. Hey, folks, if you haven't heard Kate before, she does fabulous work talking about small cap stocks, how she goes about researching, searching them. Great interviews, fabulous interviews. So stay tuned here. And don't forget, 3 o'clock to 4, Dave White, another great technician here at TFNN. Wrapped up 4 o'clock to 6 with the best, Tom O'Brien. So stay here at TFNN. And we're on right now with Mike in New York, and we are looking at FNF, and that's Fidelity National. And it's is a straight bank. What kind of bank is it?
I think they write title insurance.
Oh, isn't that interesting? doing so well when things are supposed to be so bad. All right. So title insurance, and we've got them trading at 18.73. Ouch! We've already pushed it up 2 cents since we're talking about. So this is what I'm looking at. The monthly chart is, if you can see, and Tiger TV, if you're looking, you will see that there's been, I call it a buy mode within a case, or it might look like a bowl formation, but it's really a rectangle formation. And that says that there is a good chance that it's going to try to touch the 20.29 200-period exponential moving average in the monthly chart. Good. That says that the support at $16.80 is really important over the coming 3 to 4 or 5 weeks. The weekly chart. Now, this is a very interesting technique, and you are aware of it. It's called the ChapmanWave flat base restart. If you use the low bar of the 29th of April, there is only one instance in the ChapmanWave where the low bar can also be the high bar, and that's in the ChapmanWave instant restart at a peak D. If you go to that weekly chart, the low of the week of the 29th of April, within 2 bars, it made a new high. That recovery high could be leg E or brand new A. It then goes to an F/B. It pulls back. It does not take out the low bar of peak D at 1465. Instead, what it does, it goes to a peak C, a peak D, and after peak D, it does take it out, but only fractionally, and it goes higher. And what I've been talking about, I mentioned this, what I talked about, that over the last 6 months, I'd say it's even 9 months now, there's been a phenomenon in the ChapmanWave that the flat-based restart, where it still fulfills its primary objective, which is to take it to a D or an E, but keep coming back close to the original starting point, and eventually when it does pull back, it goes underneath, and then it has a very strong rally. That's exactly what it did. It did that on the week of the 9th of April, of September of last year. Now it is in leg D in the weekly, very strong. If we go to the daily says it's in leg B, making a possible peak B today if there's no new high. And I suspect that this is going to go to the $18.95 to $19.33 area, which, of course, will be really important because it's getting closer in the monthly. So I like this very much. And all I would say is on a short-term basis, you might want to watch it a little closely if it breaks under 18. But so far, everything about it is really good. And the daily has had also a restart in the ChapmanWave. This is brand new B. I could make a case that those lows were accidental and that this is really an E. No, this is a leg B. It may be a peak B today. I like it very much. So I hope that helps you.
Yeah, would you want to wait until it taps against the 200-day? Moving average and the monthly, and then...
Oh, absolutely. I would treat this as a long-term buy, and the only time I would get out of it because of the weekly pattern is if it decisively closes under $17 in the next week and a half.
All right,
then I'd say lighten up. Okay. Thanks for being here, folks. I'll be back on Friday. Now, don't forget, okay, what I'm looking at, the Dow needs to close towards the high of the day, and I want to see 13,190 to 13,200 in the next couple of days. 12,850 is key support. I'll be back on Friday. Thanks for being